Hello everyone, and I hope you are all doing well. So welcome back to another trade breakdown. So this is the third trade that I've taken this month. It's been a pretty quiet. It's been a bit well. It's been a pretty quiet month for my model as a whole. But bear in mind I've only traded from the second week of January rather than first. But let's go into it. It's been very quiet in terms of actually finding a setup during my trade hours, which is between 7 and 9. This trade pushes the barrier just a little bit because it does come to the very end of my session, and usually by then I'm gone. But we didn't necessarily have a huge impulse as such to say that price is already gone. Price started ranging, so it gave me a reason to stay. Before I talk about the entry, there was only one other POI which we had at the start of my session. So what we had was this POI here. So if we talk about the structure going into it, so we had new highs, but then that low was eventually then taken out, followed by that. So we had bearish intent, then we had bullish intent, which is exactly what we need for the disruption model. So we had intent followed by intent. So now that gives us a valid POI. However, when I went to confirm this, what happened was on the 1 second time frame, price just flew with no disruption, no entry, nothing. And because it already at that point, when I went to move it to the 5 second time frame, it took out that 15-second structure. There was no point me following on that point, because now that mitigation is complete and that trade is now complete. It's hit that minimum target, and now the POI is completely voided. So I was following on, and there was nothing else present until we get to this stage. Now let's talk about this point. So let me try and make it as clear as possible. Okay, so let's talk about what's happening with structure from here. So what we have coming down from this point, I don't feel I need to discuss structure all the way from previous. You can backtest that yourself. But what we have is high, low, and then we have a break, and we have two bearish rules. So price is, oh, no, that's not a break though, is it? No, it wasn't there. I was looking at something else. Okay, it wasn't that. I don't know what I was talking about there. But what we had was, yeah, it was. Sorry, it was. So we had this break here, which formed this range, and then we had this break. Sorry, that was the two rules that I was talking about. That confirmed obviously price is bearish, but then we had bullish intent, which gave us this move here. Now all we needed was literally just a bearish break to give us that bearish intent, and that gives us a successful disruption, which is what the arrow represents. Normally I write disruption at the top. I don't know why I did it in this one, but if you see an arrow, that's what that means. It means the disruption was successful. Normally it's just a break of structure line that I put here. But then once we have that, it was literally the idea of identifying the POI. So here was the OB that caused that break. In terms of refinement, I refined it at the point where we have the imbalance, which is between this candle and this wick here. So we have imbalance here as the refinement. For me, that point of refinement, I mean, it was only a pip. Usually 2 pips is okay with me. There was a question about refinement, and I don't know, I can't remember the exact scenario for that. But in terms of refining, when you get to this point, in terms of seconds time frame, you don't need to refine too far. I think 2 pips is more than enough. If you over refine, the risk is you can just miss the move. Obviously, in this case, because price actually went further into the POI itself, there was no risk for me for that actually happening. But it's not always the case where price goes into a deep retracement before continuing. So just bear that in mind. In order to identify when is best to do the refinement and how much to refine, this is what your journal can give you, and then you need to identify the pros and cons for whether of how far you refine. What I suggest doing is having a set pip range, ideally. So when I first started, I had like a 10 to 15 pip range for the higher time frame, and then it was a 2 to 5 pip range for my lower time frame refinement. Then I didn't have to go any further. And then when the inception model came, because that was such a high probability model, and it still is, I don't know why I said was, but because I was using the inception, I didn't over refine too much because I didn't have to, because the setup itself was so high probability, and I was able to move to break even quicker. So I was happy to take the moves from like daily opens, for example, as in, say if that was a daily POI, I would have just taken it off the entry regardless of how big that range is. So my level of refinement has changed and it's become a bit loose over the years compared to James. You probably have to, if you look at James's trades, you'll see the level of refinement that he goes to. I don't have to do that too much. I don't feel like I need to, but it's it's a personal preference when it comes to that. But try keep some sort of rule base to it in terms of how big of the ranges you want it. For me, it's 2 pips, which is more than enough. Anyway, we have this clear POY, and now let's talk about the entry. So I don't need to rewind. So we go from the 1 second initially. So as you know, my base time frame is 15 second, and the entry time frame is the 1 second and higher. So between 1 second and 15. So the first initial move, there we go. The first initial move, what we have is just continuous breaks. So we have break of structure, break of structure, break of structure. Now, when you have 3 breaks or more than 2 breaks, that does violate the structure rules. And what does that mean in that situation? We move up the time frame. So after that happened, I went to the 5 second. And this is an important part to listen to. So in terms of the 5 seconds, so we did have the initial break of structure. So now we have the IM range. And then we have the SR. What happens after this is that the SR gets disrupted. Now this is a successful disruption. It's successful until we have another bearish break, which eventually happens here. So we create a new high and then it gets broken. And then we have this POY from here to here. Then it's the decision of whether we actually enter from here or not. Now for me, the reason why I didn't enter from that itself, as I mentioned in the post, I haven't had much success of trading from the SR disruption. It's always been best from trading off the disruption of the IM itself. So I didn't take that trade myself. However, I could have. Now, what I could have done is, if you trade this model like this, you could have taken the entry off this breakout range. And if you did that, you would have to be careful with how big this range is, because this breakout is a 2 pip range, so it's quite big. For me, that would have been too big, so I would have waited for some sort of retracement to come into it and then enter. But by then, this would have given you enough time to wait for price, to come into this POI here and then enter. The reason why I'm picking this one as opposed to this candle here is purely because this candle has more volume than this one. So for me, I'd rather enter off here and then cover the high of that range high even. So just bear that in mind in future. It's a good thing to just remember. You don't normally get candles with barely anything on except from the seconds time frame. Just bear that in mind. But for me, I would never pick an entry candle like that. That doesn't mean anything to me. I'll rather enter where the volume is, which is in there. If you did enter that, depending on your risk management, I would have taken a loss, to be honest, because I normally go to break even after 2 breaks, which didn't happen. So I would have taken a loss if I took that one, which proves the point as well of why I don't want to trade off the SR disruption itself. The good thing about this one is that the 5 second IM also links with the 1 second IM, which is what happens often anyway, which is why I've not taken many entries off the 5 second, because more often than not, it goes back to the 1 second anyway. So, it doesn't make a difference to me. Once that happened, I went back to the 1 second, sorry, and then, I didn't mean to do that. And then it's about looking for the 1 second entry. Okay, so now that this disruption has happened, all I need is a bearish break of structure and an entry. So once we had this bearish range, we ended up breaking, and that's when I entered straight off that breakout. The risk of this breakout entry is I knew the range was here, and this range itself was a 1 pip range, but the thing is, where it triggered just below it. Well, the problem with that is because it triggered just below, my 1 pip stop loss was somewhere here. Yeah, there it is. So it was within that candle itself. I didn't have enough time to on the trade manager itself. So it's the MentFX one. Please make sure you take note of it, because a lot of you keep asking. I've mentioned it a few times. It's the MentFX trade manager. It's a very easy one to use. There's also a video on his page that you can watch just to know what you get into. I do think it's a little bit expensive for what it is, but it's seamless to use. Anyway, but I didn't have enough time to change my stop loss to 2 pips or 1.5 pips. But thankfully, the EA did account for spread anyway, so it did cover the high, but that was a risk for me to do that. And the thing is, if price did come further in and say if it did take me out where it was a stop loss, but it's still valid, and I still get a bearish reaction, I would have just entered as a manual execution if that was to happen. But anyway, I entered off that breakout, and then off we went, and then it was managing a trade after that. If I didn't enter off the 1 second, and say if I stayed, I don't know why I keep doing that. Say if I stayed on the 5 second, for example, I could have done it this way, where because now the IM has been taken out, and if you're going to trade the 5 second, it is far more relaxing than the 1 second, because it's obviously a little bit slower. But what we do have, obviously now we've got this bearish break, which eventually breaks here. So I could have entered off that breakout. So you could have done a breakout from here with, could you do a 1 pip? Again, that'd be a risky one, so you have to do 1.5 on that one. So you could have entered off that, and it would have been a more relaxing entry to do that, and you would have had more time to adjust your stop loss if you're using a trade manager, that is. And again, some of you have been asking what the breakout entry is. The entry type video is in the FAQ section, so be sure to refer to that, and then you'll know exactly how I'm entering. Effectively is the fact that instead of waiting for the retracement to come back into the POI itself, we're entering on that breakout of that range, because effectively, if price does come back into the POI, you're already in the trade, but you've basically not had to wait for that pullback, because more often than not, it doesn't always pull back, and you miss so many entries. Like I've missed so many entries, which is why I made that adaptation myself. And to be honest, it's made such a big difference with me in terms of my execution, and it's probably the best adaptation I've ever made. I don't know how I didn't think about it sooner, to be honest. I don't know if anyone mentioned it to me. I can't remember what made me want to try it, to be honest. But it's been a great change to the trade plan. Let's get rid of everything. Now it's about trade management. So I went for a 10R partial at 20 pips. No real reason, to be honest, for that. I could have taken 5R at 10R, but I don't know why I didn't, to be honest. There's no like obvious reason for that. The question that comes afterwards is how did I trail the stop loss? So I trailed the stop loss quite aggressively. Now what I didn't mention is the fact that we have to be also aware that we are in this daily POI. The only reason I removed this because I wanted a clear background when I was doing the trade breakdown and when I was taking the trade as well. So I was aware that I was in this bearish OB anyway. So the ideal target would be to take out this low. Now the thing what I mentioned in the weekly outlooks about swings is whether you wish to hold that or not in terms of racking up the charges. In case of this one, I probably could have got positive swaps if I held it less aggressively. Well, if I trailed it less aggressively, but I'm preferring to close out if I can on the day with maximum potential, and that's effectively what happened. So this is what I used to do is when I was trading the EMA strategy or when I was trading the price action strategy. These are my old strategies. Even I didn't trail the engulfing strategy, to be fair, but these are my old strategies. It's the exact same trading method. Effectively, it is you follow the hourly candles. So if I go to where it was, there we go. How I moved the stop loss was originally where it was, and you go by candles of 3. So you go 1, 2, 3, and you put your stop loss above the highest of the 3. In this case, so it was here, which I didn't have to do anything about. It's when it got to this candle, my stop loss was put to this one. And then when we got to this candle here, my stop loss was put just above here. It was put there. And then that's when it ticked me out, which I would say it's a very aggressive way to trail it. But to be honest, I'd rather just bank the move rather than trying to catch a huge swing. It was a 500 pip move, which I didn't necessarily feel like I wanted to hold. That was enough for me. It was a very quick trade. I mean, from execution to closure. I mean, if I go on the 1 minute, actually, that'll give me a better idea. So it closed out about here. So what was it? It would have been this one. About 6 hours. 6 hours to make about 48R in total. It's ridiculous. So I got nothing to complain. The only thing I would say is I probably could have traded because it was such a because it was pro trend in that case in terms of following that daily POI. I probably could have traded a bit. I could have followed it a bit more loosely in terms of what I could have done is waited for a pullback and then a break of structure, then move it above the high and then continue that way, which is conservative. But again, I just wanted to bank that move because it's been such a quiet month, and now that secures me 48 plus 4, what's that, 52 R from the month already. So I don't think I don't need to trade for the rest of the month anyway. And I didn't have to, but this solidifies that position. And this is about, understanding the fact that I've only taken 3 trades, secured 52 R, whereas it just shows, do you need to trade every single day? Do you need to trade every single session to get a good return? A 50R, 58, 52R return is ridiculous, regardless of the percentage that you're doing, and regardless of the account size. It's a crazy return to have, and I think a lot of us need to show that appreciation for that. And I've only done that from 3 trades, so I only risked 3R to get that 58R. So you think about the overall exposure of your account. Say for example, you're taking 20 trades, and my maths is going to be terrible. What I'm about to say, to be fair, say you're taking 20 trades, right? And then you closed out 100R, but your overall risk to reward is not that 100R. It's because you've risked 20 to get that 100R, whereas I've risked 3 to get that 52, sorry, if that makes sense. So there's less exposure, less risk for a higher return. You may have a higher return than me in terms of the RR, but in terms of exposure and comparing your exposure to mine, think about it in that case. So this is why we try to push for being as specific as possible when you are trading. I think the only reason why you would probably want to push to be more aggressive in terms of your trading is because you're trying to pass a funding challenge or whatever, or you think that you're going to make more money by trading more aggressively. It's not the case. It's just not the case. You're just exposing way too much. So think about it in a more realistic view in that case. But overall, it was a great move for me. It was getting quite boring not catching anything, so it was nice to catch a move. And this was at the very end of my session, so maybe I should sit to the end of my session. I'll be honest, I'm trying to limit my chart time massively, and I tend to just walk away as soon as London opens because I've not caught the trade. Because what was happening with EU, I would catch a trade at Frankfurt and it'll follow on through London. It'll either go back to break even or I'll get continuation. That's the process that I was in, so I was always finishing before 8 o'clock anyway. But maybe things are different with GU, which I haven't noticed yet. But it's clearly the case because a lot of my trades have been quite late for GU so far. Not that there's been many, but I'm going to continue trading GU. I think I've enjoyed it. I would say it's more volatile than EU. It does move quicker. The only thing is the spreads can be a little bit of a pain. So, but it's not been too bad an advantage, to be fair. Especially at time of execution, it's been pretty solid. And my risk manager, the EA, sorry, it closes my trade if only the price hits the stop loss rather than the spread. So I'm not really affected by spread, but it does detriment your stop loss just a little bit. It just add a small percentage risk to your overall risk anyway. So just bear that in mind if you are going to use that one. But overall, I hope that was clear. Actually, you know what? Just to reiterate, like I've done in every other video. So the whole summary of this trade, effectively, we had what was it? What happened? Let me go back to the 15-second. Remind myself. Oh no. Okay, yeah. So effectively, what happened here was, there we go. Price was bearish. Then we had that bullish intent. Hold on. Then we had the bullish intent. Then we had bearish intent, and then we had a valid POI, which was here. And then we had the exact same thing when price came in. We had a disruption, and then we had an entry, and then a continuation to the downside. Effective is same as that. The good thing about this model is that you can't necessarily go wrong in terms of the higher time frame and your entry time frame, because you're looking for the exact same thing. This is probably as rule based as you can get it in terms of 15-second base, 1 second entry, disruption on the higher time frame, disruption on the entry. There's no discretion there at all. I guess the only discretion was probably whether you take the trade off that SR or not on that 5 second. But I've explained my reasoning as to why I didn't. It's up to you to decide whether you're going to take that risk. If you are trading this model, I haven't seen many of you trading this model. I think it's because it doesn't give you as many entries as James's one does. But if you are trading this model, it'd be good to know how you're getting on with it, and I hope you're enjoying it. Obviously, if you're still trading the Inception model is still great. It's still working fine. This is just a more relaxing and easier way for me to trade myself, which is what we should be striving for, to be honest. But that model was great. I used it for 2 years, and it was solid. Was it 2 years? Yeah, almost 2 years basically. So yeah. Anyway, I hope you all take care. I hope you have a great evening, morning, afternoon, wherever you are, and enjoy the rest of your trading week.